Welcome, ladies and gentlemen, back to another episode of the Good Doc Talk Stocks. Of course, I am your host, Good Doc Dr. Mike. Back in here, y'all make sure y'all get the likes up. Not only get the likes up, y'all make sure y'all get your stocks up. Make sure you get your stocks up. Facts. All right. Without further ado, I don't wish to waste too much time. Let's go ahead and get into this video today. A lot of people have their own methods of dollar cost averaging, or what I would like to refer to as the drip buy. Drip, drop, drip, drippity drop. You remember that song? For me, there's only one surefire way that this is gonna work for me. First things first, I need you guys to understand one thing about me. I have to admit that I would consider myself to be a very, very conservative investor. In most areas, I would have to say overall, I am considered to be a very, very, very conservative investor. And the reason that is because I have to make sure I put myself in a position where if I'm going to lose, it's never going to be more than I can afford to lose. Everybody knows that that is the rule of investing, period. Investing has risks, right? So you never put in more than you can afford to lose. Facts. So when it comes to dollar cost averaging, aka drip buying, there is truly only one surefire way to actually do it, at least in my opinion. All right, and I'm gonna share that with you guys today. For myself, when it comes to dollar cost averaging, and I'm not even in the actual company yet, I have to make a decision at where I want to buy at. Now, none of us, I don't care how good you are, I don't care how equipped you are or how well you follow the analytics. If we're gonna keep it a whole $1.50 here, none of us can predict the market. None of us can predict the bottom. So you have to find that range for yourself, your comfortable buy point. So once I find my comfortable buy point in any company, I always choose to invest, and I kid you not, between 5 and 10 shares worth of that company, okay? It's always gonna be within 5 to 10 shares of a company. If it's something like Tesla that's a little on the higher end, maybe not so many. I might just grab the handful if I can afford it. But when it comes to higher end companies, it might be a little bit more. But companies that are trading at what I would like to consider a fair value and a value in which I can afford to put more into, I will gladly invest whatever the cost is for at least 5 to 10 shares of that company. And then from there, we start to work our magic. Let's say, for example, it starts to uptrend and you see things going good. You know what I'm saying? Maybe I'll ping a couple of shares here and there. Because again, I don't want my my average price or my average share price to be extremely large and just basically floating just below the actual price of the actual stock. All right, I want to give myself a fair chance at a fair range, but then again, you got to understand when it comes to dollar cost averaging, you're going to buy in where you want to buy in. And you're going to continue buying at whatever cost you want to. I know people that dollar cost average Apple. Regardless of what the share price is, it doesn't matter to them. They're just going to continue to buy and buy. I can see that, but I think that once my shares start to pop and they start to tip and I see them really doing well, I'll probably choose to stop at a certain number until I see that share price go to a point where it's high enough to where if I add more to it, I'm still earning a profit. All right. So that's kind of how I've been able to from the uptrend perspective of dollar cost averaging. Maybe I'll throw in 2 shares, 3 shares at a time until I'm able to feel comfortable enough to keep adding more, keep adding more, keep adding more. Now, when it comes to drip buying, and I think this is the part of investing that most of us enjoy the most, but we regret or dread the most at the exact same time, because it shows that our stock that we've chosen is actually not doing as well as we thought that we hoped that it would, but it also gives us an opportunity to buy more into this. All right, for myself, I'll give you an example in order for this to be able to work and you guys can feel where I'm coming from. Okay, so I'll choose the investment that I had in Southern Company. All right, stock ticker SO. That was the company that I recently got out of a position of. I made a video about that. You guys should go check it out. I'll leave it linked in the description area below. But in that particular video, I think that I started buying in, or day one, I should say, Day one, I started out at about 56 average, about $56 per share. As it continued to drop, and I mean from the time that I held it to the time that I sold out of it, or to the time that it actually popped, which was only just in and around their Q3 report, that's when it really started to do well. I'm sorry guys, but about that time I had just, it was a miserable month because I kept having to buy and average down. But when I'm averaging down, because I can never predict the bottom, guys, I'm buying 2 or 3 shares at a time. So luckily for me, that's about $100, give or take, maybe 110 at top when it's starting to dollar cost average down. So I'm putting in $100 every couple of days, $100. So I'm buying 2 shares at a time until I finally got to the point where I had enough shares accumulated to where I was like, man, I'm good. I don't know exactly what's gonna happen with Southern Company. I no longer wish to add more money to this particular investment. I could use that money in other areas, but I am not going to sell out of it because it is not doing well. That was the mindset that I had. I put in enough shares to where I was comfortable to say, all right, I'm good. Regardless whether this does good or bad, I'll just live off the dividends if I can. That was my thoughts. Until it actually decided to do well, actually turn a profit, or at least in my average share price, it decided to, do a little bit better than my average share price. Substantially more than my average share price. And because I held a significant number of shares, I decided to get out of it. But had I not decided to get out of it, I think that it would still continue to do okay. All right, without a doubt. So for me, when it comes to dollar cost averaging, it's literally 2 to 3 shares every time the price drops in and around 5%. That has always been my rule. If the price drops in and around 5% over my overall average pricing in total to the amount of shares that I own in reference to the amount of loss that I've taken, if it drops 5% or more, I'm throwing in at least 2 or 3 shares to try to see where we can figure this out. If it continues to drop, another 2 or 3, another 2 or 3, another 2 or 3. Again, I am a very conservative investor. Now, if you got the guap and you got the money where you could just make it rain and you can afford to drop 1,000, 10,000, a couple bands on some shares when they drop, go for it. But for myself, it's like, I don't see the point when A, I don't know where the bottom is. B, I'm putting in this money and I'm not sure if I'm ever going to see a profit, nor am I sure if and when the profit may actually come. If you're going to be sitting on something for 2 to 3 to 5 to 10 years, granted, luckily with dividend investing, if you're in a dividend stock, you're going to continue to get paid from it regardless. I mean, whether they cut dividends or not, likely you'll still get a little chunk of change somewhere. But if it's not going to at least turn a profit, it's like there will probably come to a point in your life where you're like, yo, I don't feel like taking an L anymore. I just don't. And after recording of this video, I can say that I have that same confliction with AT&T. After recording of this video, I can say that I have the same confliction with AT&T. But you know what I continue to do with AT&T? I continue to buy 2 to 3 shares at least once a week. Maybe more. At least every 3 to 4 days or so, I might throw in a couple of shares. It's just too cheap to just let it go, right? We'll just say at the time of the recording, it was trading under $30 a share. Anywhere between $27, $28, $29, anywhere between $27 and $29 a share was about what it was trading at the recording of this video. And that's probably still, at this point, who knows, whenever you're watching this video, what it's actually trading at. It's just too good to be true, and it's just too good to pass up on the fact that basically, if you look at it in hindsight, let's say you get in at AT&T at $27 a share, and they're paying you per share $2.08, roughly about 10% return per share owned at that particular moment in time. And I say 10 based on if it was 20, of course. I mean, it's 27, so it's a little less than 10, roughly about 8%. What was it, the 8% payout? It's just too good to pass up on. And all things considering what AT&T has done in the past, and you're looking at its history and its consecutive growth and, its consecutive dividend payout, it's never missed, it's never cut, it's never done any of that. You're looking at it from that standpoint of how steady the company is, and you're like, why would I not drip buy in AT&T? You know, it's like, why in the hell would I not drip buying AT&T? So that's where we stand. And that's my own philosophy with drip buying. Again, I will admit I am a very, very conservative person as it pertains to how I choose to invest. And the reason that is because I don't have a lot of money. I'm not rich. I never told y'all I was rich. Right now, I'm trying to create wealth. There's a big difference. I'm trying to create it. I'm not there yet. That's where all investors start. Luckily, I always have conversations with my mentors. Just the other day, we were talking about how millionaires are made during pandemics and elections. So this video may come out after the election has already happened. So you're probably not going to get my foresight on it right now. And I just want to make sure I note this is a pre-record. This isn't something that's coming out after the election. It's just before the election as of the time that I'm recording this video. But again, as it pertains to drip buying, as it pertains to how we choose to invest our money, everybody is different. For myself, if I'm just looking into a company, 5 to 10 shares off the rip. How it reacts after I buy into it will determine how I will buy in. 2 to 3 shares on the drip or 2 to 3 shares on the dip. If I'm drip buying, after it drops about 5% of the overall percentage of that particular stock or share in that portfolio, in my portfolio, if it's on the uptick or the uptrend, if it pops hella good, I'll probably throw in another 2 or 3 shares, but it's gonna increase my average share price. So I have to be careful because again, I wanna be able to post profit. I don't just wanna be able to break even. You wanna be able to post profit. You don't wanna just break even. I am not in the market to break even, ladies and gentlemen, and I don't think you guys are either. But if you're not in the market and you're looking to get into the market, in the comment section below, check out my M1 platform, guys. If you want to get started, M1 is hella easy to use. In my personal opinion, I enjoy M1 financing. If you don't have a profile with them and you're looking to get one, check the link in the description area below. You sign up, they're gonna give you a free 10 bucks, man. I'll get a free $10 as well. And it is what it is. I mean, I know Robinhood got their own joint. I know that, what's the other one that people be talking about? The one where they giving away 3 stocks and stuff. They're dope too. But yeah, I use M1. I like M1 Finance. It's very easy to use, very straight to the point. All right. It is what it is, ladies and gentlemen. Again, if you enjoyed this video, get the likes up, but don't only get the likes up, get your stocks up too, ladies and gentlemen. This is 2020, and from this point on, I promise you, the world will never be the same. A, and B, your stock portfolio should never look the same. And I'm gonna leave you with that positive message. Y'all stay blessed, y'all stay true. Doc is out. Peace.